And it's 1 p.m. That means it's time to do business, even when there's a public holiday in Nigeria. Welcome to Business Incorporated. And here's what we have prepared for you on this episode of the program. We'll start in South Africa, where regulators there are looking at the crypto space for more taxes. Protest in Kenya, reaction to more taxes coming from the Kenya Finance Bill 2024. And in Nigeria, 10 more days for registration. That's according to the Nigerian Upstream Petroleum Regulatory Commission. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. We do business now, starting from the global space. Oil prices ticked up in early trade on Tuesday, extending gains from the previous session on a stronger demand outlook and investors' confidence that OPEC Plus producers could pause or reverse plans to raise supplies from the fourth quarter of this year. Global benchmark Brent, the crude futures, were up 21 cents. That's about 0.24% at $84.46 per ounce, while U.S. West Texas Intermediate crude futures also went up 16 cents, that's 0.2%, at $80.49 a barrel. Both benchmarks gained around 2% on Monday, closing at their highest since April. Hedge funds and other money managers bought the equivalent of 80 million barrels in the 6 most important petroleum futures and options contracts over the 7 days ending on June 11. Purchases reversed about 40% of 194 million barrels sold a week after OPEC Plus made that announcement. Tensions in the Middle East is also still a factor. It kept flow under the market with the potential of a disruption to global oil supplies from the key producing region in Israel-Hamas war in Gaza. Also, a U.S. special envoy on Monday visited Jerusalem, seeking to calm the situation on the disputed border of Lebanon, where Israel said that tensions with the Iran-backed Hezbollah militia were beginning to bring the region close to wider conflict. Still in the global space, but metals now. Gold prices edge high on Tuesday as Treasury yields eased, with market participants awaiting U.S. data and comment from the Federal Reserve officials for more clarity on the central bank's roadmap for interest rate cuts. Spot gold went up 0.2%, $2,323.97 per ounce. U.S. gold futures also went up 0.4%, $2,339. Benchmark 10-year Treasury yields edged lower, making gold more attractive, while the dollar has held steady. The U.S. retail sales data is due later on, followed by weekly jobless claims. That's supposed to be out on Thursday, and then flash purchasing managers' indexes supposed to also come out on Friday. And all of this are supposed to feed investor sentiment in the coming days. Traders are seeing a 76% probability of an interest rate cut in November, and that's according to CME Group. Now we come to Nigeria. Reports that the Muslim celebration, Salah, which is still ongoing in the country, Nigeria, is being hampered by cash scarcity. The views of stakeholders in the financial inclusion space is that this is another evidence of inadequate infrastructure in that space. The co-founder of Hasey.org was a guest on Business Morning earlier today, believes that Nigeria should have developed beyond this level. He's also asking that attention be given to supply of cash in circulation.
What the point of sale service, which popularly is called POS, is contributing to financial inclusion. We should realize that though we are not where we want to be, there's been a lot of progress over the years. But they shouldn't be out of cash, because the fact that POS services, so POS operators are able to serve people, especially low-income individuals, women especially, and if you think about the other value chain, farmers also, you realize that there's a big opportunity when POS are in business. So if they're out of cash, it's important, and it also calls for more thinking around the two sides of financial inclusion, which is the demand and supply side. POS represents the supply side. What are we doing infrastructure, regulatory-wise to make sure that they are able to serve their customers really well? So definitely, if the question directly is to say, should this be happening? Definitely not. But how can we address some of these issues? We need to innovate more around what POS is even doing for the low-income people.
Financial inclusion still top the conversation right here in Nigeria. And still from that conversation that Ladi Williams had during Business Morning is real estate. It contributes about 0.5% in the first quarter of 2024 to Nigeria's GDP and compared to 2023. But stakeholders in that industry are saying that they could have done even better, but for some obstructions, such as the number of agencies which they have to deal with. The guest this morning, Barrister Tokpe Salami, partner at IRT Associates, said that they have to deal with more than 17 agencies in the carrying out of a single transaction.
Parts of Lagos State, you even see local government coming in. You know, for stocking materials on the road, sometimes you see local government officials come in and say, well, you don't have the right to do this. If you want to build a property, your materials must be in the confines of your building. And, you know, there are too many agencies, in my own view, doing the same thing. Right. You see, there are too many agencies doing the same thing. If it would have been easier if we had about 2-3 agencies, we know that's what it's applicable all over the world. You know, for example, I don't see why LAPSCA and the Lagos State Fiscal Planning Permit Authority shouldn't be merged into one. You know, they seem to be doing the same thing. Then you see the Lagos State Material Testing Laboratory. You know, they are also there. And they have, what they do is, you know, they get a mixture of your concrete, you know, they just want to test the viability if it's solid enough. Well, if we're in a system where those bills can be calculated based on what you earn, you know, it would have been easier. But for example, I'm doing a construction in somewhere in, let's say Mushin, for example, and I'm giving a personal income tax of over 2 million naira to pay, you know, which even is more than what the fiscal has. So a lot of these issues, you know, has caused a significant decline in, you know, real estate development.
Now, the just concluded Afreximbank meetings that are held in the Bahamas. One high point there, of course, I'm sure you saw that on the program. The founder of Dangote Refinery was a star there, celebrated for his determination to go through the odds to now have the refinery, and his views there, talking about the development and industrialization of Africa, which seems not to be supported by the Western world. That stood out. I'm sure you've seen the video, even on social media. Another thing that came out of that Afreximbank is the creation of the Africa Energy Bank. We hope to have a conversation on that later on this week with an official from Afreximbank. I think they're still trying to recover from the organization. But we have an individual who was there at the meetings in the Bahamas. He joins us now from our Abuja studio. He's the Chief Executive Officer of Star Advisory Limited. Mr. Kevin Ekalafo joins us. So, Mr. Ekalafo, welcome back from the Bahamas. I believe your trip was safe and beneficial.
Thank you, Ini, for inviting me. And yes, my trip was safe and beneficial.
All right, so let me start from, you know, Mr. Aliko Dangote's comment. I wonder if you were at that session where he did say that it does seem like the Western world is not supporting Africa's industrialization, and so Africa should get up and take responsibility of its development and industrialization. I wonder if you were there and some of the reactions, because, I mean, you have a lot of people from the Western world who were at that meeting, the reaction and sentiment around that statement that he made.
Yes, I was at this session, and I must say it was applauded by a lot of the participants or delegates at the summit. Clearly because it's a recurring decimal. It's something that's happened across different African countries. And it's not just to the petroleum sector, to Dangote Refinery specifically. It's also happening in the aviation sector, where you are very well aware, it's well documented, the travails that Air Peace and Barrister Oyema are going through since they got the slot to fly the Lagos-London route. It's repeating itself in many other sectors. The truth is, the Western world has liked the idea where we were dependent on them, and basically they have made a fleecing of Africa, of Nigeria specifically. They've made so much wealth from our dependence or importation of finished products from the Western world. And to their consternation, we are waking up, and it's happening on multiple fronts. And my prayer is, long may it continue. We would like to see that also happen in the power sector and many other sectors, infrastructure, education, healthcare. We need to wake up and not depend solely on the Western world to provide all our requirements. The truth is, I would like to reiterate what the president of Dangote Group said. Only Africans can develop Africa. And so we need to brace up and key into this vision of Africans developing their own continent.
Yeah, well, I mean, even at the IMF meetings and all of that, we hear that perhaps coming from Mr. Dangote to make a difference, because we have meetings such as this, we have great conversations and all of that. But does it seem to you like Africa is really waking up to that core, to know that we have to take up the responsibility for industrialization and not wait for the Western world to help us develop?
I must say that there's somewhat of a renaissance in Africa, because, why would I say so? Look at the Francophone countries in Africa. A lot of them are breaking away from the stranglehold of France, who has been their colonial master, holding 50% of their CBN or their resources. A lot of them are also pushing the agenda of self-determination. Even against even the whole idea of democracy, they are even having military takeover, and the people are rejoicing. So I must tell you, at the summit, I had discussions with Africans from every part of the continent, from the north to the south, to the east to the west. And the truth is, Africans are tired of being enslaved, even after they have received their independence. So the truth is, it is high time. Africans have called for this for a long time, and they are happy that they are getting better deals by determining their future themselves, not necessarily the West determining who rules them, how they are ruled, and on what terms they are going to operate in their economies. You know, Africa has a lot of mineral-rich nations, but they have been impoverished, from Niger to Chad to DRC. Almost all the mineral-rich countries in Africa are in extreme poverty. Nigeria is also an example, you know, with illegal mining going on in a lot of most parts of the north and most parts of Nigeria. And a lot of these minerals find their way to the west, to China and the developed nations, and the country, Nigeria, does not get any benefit for it. So it's about time. I can hear that the Ministry of Solid Minerals is developing some military or security network to protect the mine site and to regulate operations in those mine sites. I'm also happy that we are doing what we're doing in aviation, supporting local airlines to take over our skies, to get a better deal. You can imagine when people were paying 15, 16 million for a ticket to London, and now we are paying 1.2 million via Air Peace, and that has caused a crash of the prices. We couldn't even determine the kind of food we ate on such flights. Now, these foreign airlines, namely the British Airlines and others, now serve jollof rice, now serve Nigerian food. So, like I said, long may it continue. We need more competition, and the truth is, we need to have a lot more nationalistic focus, a lot more patriotic agenda being pushed by the government of the day, because we should consider in every sector the Nigerian companies who operate in that sector first, you know, and give them the privilege, the benefit that they should get as Nigerian companies or Nigerian-owned companies. ahead of just giving everything to foreign-owned companies who treat our citizens very poorly. I mean, it's well documented from hotels to construction. Nigerians are treated badly. Someone who's a technical or technician from Germany or some other country is treated and given better benefits than a qualified engineer in Nigeria and a lot of these foreign construction companies. There are so many issues across the sector or the economy. So for me, it is the right thing to do for Nigerians to develop their own economy, for us to be the first people to invest before calling in foreign direct investment. If the local investors are not interested or are not given a fair shake of the coin, it's not going to augur well for the people who are beneficiaries, the citizenry who are going to be paying for such products or services.
Yeah, so another high point of that meeting was the Africa Energy Bank that was launched. Of course, I do recognize that you are not an official of Afreximbank, and we've been talking to them about coming to the program to discuss that. But for you, being there and hearing about this, what do you know about it? What are your expectations from it?
I'm aware that a number of countries bidded or are bidding to host the Africa Energy Bank, but I'm also aware that Nigeria is a front runner amongst the few nations who are bidding to host the bank. I believe that situating here in Nigeria has a lot of benefits for the Nigerian oil and gas sector and the energy sector as a whole. And it's going to be a major catalyst to spur investment, especially in the energy space. As you know, internationally, a lot of the banks are reducing their percentage of the portfolio given to oil and gas with the new wave to move to cleaner energies. But unfortunately, they have not considered the fact that Africa needs those fossil fuels to develop, to ramp up its development, to catch up with the other parts of the world. So if they just switch off, it's in a way is killing the chance of African nations who are still at the early stage of their growth to be able to catch up with the West. So for me, it's a fantastic idea to bring that to Nigeria and to help develop a lot of the... Nigeria has a lot of oil blocks that have not yet been developed, both onshore and offshore, especially the deep offshore. There are a lot of opportunities for us to develop the oil and gas space. And you know that gas is a commodity we badly need in Nigeria for power, for the industrialization right now. So the more, the merrier. I know a lot of these banks internationally across Europe and the West do not want to fund energy projects anywhere. And even when they do want to fund, they would rather take it elsewhere. Africa is not giving the preference anymore. So getting this energy bank situated here in Nigeria is going to be augur well for the oil and gas space in Nigeria and the energy sector as a whole.
All right, thank you so much, Chief Executive Officer of Star Advisory Limited, Mr. Kevin Ekalufo. We look forward to, maybe more conversations on the Energy Bank and how we will benefit from it. But thank you for sharing your experience with us.
Thank you. Thank you for having me.
Let's take a break now. When we come back, we'll head to the markets with Anita Edit. Will join us again. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now with Anita Edit. Anita, good afternoon. Markets are still closed for the holiday to resume tomorrow, but I do know you have some interesting conversation for us.
Yeah, of course, our traders are actually enjoying the holiday, but then counting down to their resumption. And one of the news that we have is when the market opens, although it's going to be on Thursday, where Fidelity Bank will be having a combined offer of both its issues, its rights issue, as well as a public offer. But our analysts, which we have today, will be telling us more about that and also what some other things to expect. So now let's talk about markets, Nigerian stock markets, as well as the Kenyan Stock Exchange and Egyptian Stock Exchange. They're still on holiday. This is where we last stopped as at Friday, which we talked about yesterday, and the reasons why that market is sustaining the growth. First of all, they said it's foreign portfolio investors, but we'll be talking more about that with our analysts just a few seconds from now. But for this Johannesburg Stock Exchange, it was a 3.19% strong gain at intraday, where we see that market index gradually climbing into the 80,000 points, so which is quite a high, all the way from the 70, which is it has been tottering, going back and forth. But at intraday, it's just at the corridors of the 80,000 points at 79,508.63 points for that market. And now let's move from there and talk about the Nigeria's stock market. We're looking at the review of some of the activities last week, where we saw Toleran making that aggressive acquisition in Guinness, Nigeria, taking over the shareholding from the former parent company, which is Diageo. So we'll be talking more about that. And we have our analyst to join us on the show, Abiodun Adedotun, equity trader at FBN Quest. Thank you for joining us, Abiodun.
Thank you very much, Victor. Happy holidays.
Happy holiday. Well, you're at home and we're here in the studio. All right, so now it's just about some few hours before the market resumes for this third week of June, and of course, but let's take a review from last week, where we saw that. What's your assessment of this acquisition by Toleran from Diageo? How is it affecting the market? We know that Guinness has been gaining, but so far, how's it affecting the market?
Yeah, of course, shareholders are excited about the news because, of course, it gives opportunity to be able to allow the stock price to get some form of traction. You recall that Guinness, alongside a lot of consumer goods companies that have international exposure, they've been suffering because of these issue relating to FX and FX-related loans on their books. So, of course, the impact of Toleran cannot be underestimated. They've done successful business. They've had successful businesses, in the consumer space in Nigeria, and looks like this company, they obviously know how to get things done in Nigeria. So it provides opportunity for alpha to investors. So you'd expect the company's stock price to continue to in towards the 80 naira mark, but what the deal is expected to be consummated.
Okay, so now let's fast forward into Thursday, although the market is reopening after the Muslim holiday, the two-day back-to-back Muslim holiday. So now, and on Thursday, we'll be expecting that Fidelity Bank, which is Nigeria's sixth largest bank, will open its public offer and rights issue, which is targeting to raise about 127 billion naira. So how do you see this affecting the banking sector and the bank in general?
Obviously, there's been a lot of excitement ahead of, the banking recapitalization offer. Fidelity looks like the one that is going to be setting the pace post the announcement of the limits by the CBN. So I expect that the optimism will continue to arise. And if you check for last week, the banking stock were actually the big driver to what's happened in the market. MTN lost, so of course, gains in the banking sector was able to propel the market towards the ultimate gain that was recorded. Of course, not just Fidelity, a whole lot of course, tier one banks are coming up. I think JCB is also coming in July, and Access is around the corner, FBNH, Zenith, all of them, you understand? So there's a lot of optimism that these banks should be able to get something done.
But I think we'll leave it there, and of course, look out for the markets. The markets opening after quite over from the weekend into the first 2 days of this third trading week. But thank you so much for your analysis on our show.
You're welcome, Victor.
As Abiodun Adedotun, equity trader at FBN Quest, with the market numbers for the equities market. Now, from there we move over to the Middle East. Saudi Arabia is still on holiday, as well as Qatar Stock Exchange. But on the United Arab Emirates, the two markets there, the Abu Dhabi and the Dubai FM, they were trading mixed sentiment. You see some bargain hunting there across the counter on the Abu Dhabi index. But the Dubai FM, on the other hand, recorded a 0.09% gain at intraday. So these two are still trading. So, but the other counterparts in the Muslim world are still on holiday. So, but they'll be opening in a couple of days from now. But Saudi Arabia will have its closing day on Thursday. So we look out for that opening. And from there, we move over to the United States, where the stock futures are a little bit to change, coming over from the gains, the massive gains that they had on Monday. We see the Dow Jones Industrial Average, the futures early this morning, 0.04% in the red, and the S&P 500 in the green by a tad, 0.02%. For the NASDAQ is 0.18%. Overnight, we saw the likes of all the tech heavies there. They printed quite a strong gains there. We saw the likes of Broadcom, we saw the likes of Apple, and the likes of Nvidia, which is still in the news, lifting the market. So, but later today, which is about 2:30 Nigerian time, when the market resumes for trading, traders will be expecting the retail sales data for May, which is due today, for insights into the health of consumers within the United States. Economists are already polling a 0.2% growth up from April for that market. Other economic reports, which is expected within the U.S., is also the industrial production and business inventories, which is also expected later today. But for tomorrow, the U.S. will be closed for the Juneteenth holiday, so it's still holiday in some parts of the world, even though it's not on the same day of the week. So all the markets, the traders will be looking out for that. And finally, for the Asian markets, we see the Asian markets rebounding from the losses that they had on Monday, to be precise. We see the Nikkei 225 making a 1% gain, and this is coming after the central bank had kept their interest rate unchanged. They announced that they could raise their interest rates in July, depending on economic data which is available at the time. So that's how it turned out. For the Kospi, we see the South Korean index in the green, 0.72%. For the Hang Seng Index, we see a pullback there, 0.11%. For the Shanghai Exchange, we see a bit of gains there, while for this Australia, we see 1.1%, which comes after the Reserve Bank of Australia kept its interest rate unchanged at 4.35%. That's for the fifth straight meeting, and they say that inflation remains above target and proving to be persistent. So, Ini, that's it for the market in just some few minutes.
Yeah, well, I guess this week as a whole is going to be very shortened.
Holiday week.
Different days, but I mean, surely almost every major market is affected by the holiday. Thank you so much, Anita.
Pleasure.
Right now, let's head to London, where it's a bit of good news, or mixture, I should say, because UK grocery inflation is down. But is the cost of living crisis over? Juliana joins us with the details. Hi, Juliana. Good afternoon.
Good afternoon, Ini. I think it's a great way to explain the point, because yes, grocery price inflation is down, but the cost of living crisis is very much not over. Although if you're living in the UK at the moment, you would think it is if you are consumed by the media, because of course we are bang in the middle of a general election campaign. In fact, in 2 weeks and 2 days, Brits will go to the polls, and of course a big talking point of the campaign has been the economy. So on the one hand, this information, this data that's been released by Kantar, which is a grocery market research company, is good for the Prime Minister. He has had a very, very difficult couple of weeks. Of course, I suppose most people have been seeing that. The Labour Party, Sir Keir Starmer, way above him in the polls, head and shoulders above. He is likely to retain the keys. However, there has, of course, been lots of work that the Chancellor of the Exchequer, Jeremy Hunt, and the Prime Minister, Rishi Sunak, have put in place to make sure that inflation is coming down. And one of the big indicators, or should we say what was pushing inflation up, was energy and grocery prices. At one point, I think grocery price inflation was at 20% in this country, Innie. If you consider the fact that for the 16th month in a row, it's come down to now being 2.3%, I definitely think that Prime Minister Rishi Sunak will be giving himself a pat on the back. Lots of intervention was done, not just late last year, but of course early this year, one of them being Jeremy Hunt, the Chancellor, hauling in grocery bosses, demanding that some of the wholesale price cuts they were seeing would be trickled down. And that's what we've seen in this data, that they were trickling down the prices. The grocery sector has become incredibly competitive at the moment. In fact, according to this data from Kantar, Asda, which has always been the third largest grocer in the UK, could potentially be taken over by one of the smaller, much more newer brands like Aldi and Lidl that we've seen come into the sector. And that's because they are offering pretty much the same product, but at a lower price. And if there is a cost of living crisis, then of course consumers are going to go where their money can stretch the furthest. So yes, some much needed light relief for the Prime Minister. Is this going to change the outcome of the polls? I don't think so, but certainly for the vast majority of Brits who are still really struggling at the moment, the fact that prices appear to be as they were just before the pandemic can only be considered a good thing.
Yeah, considered a good thing, and we'll see how that affects their choices at the polls. But what about the market? How's that looking intraday?
The markets are in tip-top shape, actually. Lots of gains. I think, investors really enthused by that data from Kantar, particularly as it comes just 24 hours before the Office for National Statistics will be releasing the all-important inflation data for the month of May. Inflation in April came in at about 2.3%. So literally just a whisker away from that benchmark all-important rate that Andrew Bailey, the Bank of England governor, wants, which is 2%. If we get there tomorrow, which is incredibly likely, then perhaps when the Monetary Policy Committee meet next week, Thursday, we could see the first interest rate cut of the year, which is going to, of course, have global ramifications. Also worth mentioning, because, of course, Britain is the birthplace of football, that the Euros is going on at the moment. This has a massive impact on the economy, because when England are playing, the pubs are full, everyone's in a good mood, people are spending money, even money that they don't have any, and that's all been reflected in the markets at intraday. So the FTSE All-Share is up 0.48%. The FTSE 100 is up at intraday by 0.44%, and the 250 in FTSE domestic market, that's up by 0.71%, so major highs on the index. In the currencies market, the British pound is currently trading down against the US dollar, although it's trading up against the euro by 0.01% and up against the Japanese yen by 0.04% at intraday, Amy.
Yeah, thank you so much, Juliana. Right now, let's head to Berlin, where more than 2 years after that full-scale Russian invasion of Ukraine, a default deadline now looms for Kyiv. For more on intense talks about how Ukraine wants to restructure $20 billion worth of international debt. So it's debt talk for Ukraine and how they will handle that. Cassandra tells us the perspective of Berlin. Hi, Cassandra. Good afternoon.
Thanks for having me, Inni. That's right. So these talks yesterday were about how Ukraine can restructure about $20 billion worth of international debt ahead of an August deadline. Now, the agreement that's currently in force between the Ukrainian government and international bondholders essentially allows Ukraine to suspend payments. That's due to the full-scale Russian invasion of Ukraine. But the clock is ticking as this deal is set to expire this summer. Ukraine's finance minister has said that the country's economy was in a, quote, fragile balance, and that it hinged on consistent and substantial support from its partners, adding that the timely debt restructuring is a critical part of this support, and that, quote, strong armies must be underpinned by strong economies to win wars.
So what are the proposals on the table at this time?
Well, these two sides are very far apart at the moment. Ukraine has offered to swap bondholders' existing debt for 5 sovereign bonds that would mature between 2034 and 2040. Then there would also be a so-called state contingent debt instrument, or SCDI, and that would be linked to tax revenues. Ukraine has also offered investors an option of including only conventional bonds, but overall, the offer from Ukraine would have translated into a debt haircut of between 25 and 60%. Depending on the performance of those SCDIs. Meanwhile, on the other side of the negotiating table, the bondholders put forward 2 counter proposals, both of which carried a nominal haircut of 20% and allowed for the potential full recovery of concessions. The packages also consisted of 2 types of instruments, including paying a coupon in excess of 7%, as well as a, quote, recovery bond, and that featured variable stepped-up payments. And this is all according to a Ukraine government statement. Kiev added that neither of the bondholder proposals met International Monetary Fund requirements.
All right, Cassandra. Let's head to the markets now and find out how investors are faring.
Well, on the opening, there was a rise at the start of trading today that followed gains in Tokyo and record highs for Wall Street. The London FTSE 100 grew 0.6%, the Paris CAC 40 advanced nearly a point, and the Frankfurt DAX gained 0.8%. But the factors that investors will be watching today is how markets digest a bevy of commentary and data that's due today. We're expecting commentary from central bank officials from around the world, including some U.S. Federal Reserve officials and the European Central Bank's vice president. Meanwhile, a final reading of the May Eurozone inflation is due, and so is a survey of economic sentiment from Germany, which is the biggest economy within the EU.
All right, Cassandra, thank you so much for that update. We'll do it again tomorrow. Now let's come back to the continents, beginning in South Africa, where the Revenue Service has announced the commencement of tax season 2024, signaling proactive stance towards tax compliance, utilizing advanced technologies such as machine learning and artificial intelligence. The Revenue Service says it aims to simplify tax filing processes while bolstering enforcement against tax evasion, including targeting crypto traders and assets for taxation. Speaking to the business desk, Tusani Miyandu from Mazars Tax Practitioners says that there's a need for coordination and collaboration between SARS and tax practitioners in order to enforce compliance.
Building trust, I must first start by saying that there are tax practitioners that are not doing well. They are not providing the correct services to their clients. So SARS needs to deal with those. The recognized professional bodies need to deal with those. But by and large, the partnership and the contribution that tax practitioners are having is huge to ensure that most of taxpayers are compliant. I mean, if you can quantify that, how much of work that tax practitioners are doing, then you will realize that there's a lot of contribution. Now, if SARS frustrates tax practitioners and they're not able to operate and work, then it becomes a problem, because right now you can't, as a tax practitioner, get an appointment at SARS. They say they don't want to have walk-in appointments for tax practitioners. So I think if we can fix that relationship, then you go a long way towards having compliance, because the reality is not everyone has got the skills or the know-how for them to be tax compliant. Therefore, you need professionals to assist them.
Well, every country looking inwards now, trying to raise revenue, of course, it's through taxes. I'm sure Ladi will be interested in the aspect of the crypto traders in South Africa. But before we head there, the Nigerian Upstream Petroleum Regulatory Commission has announced an extension to the 2024 licensing bid round registration by 10 days. The Commission Chief Executive Officer, Engineer Gbenga Komolafe, who shared this in Abuja, says that the extension is to allow interested investors take advantage of expanded opportunities. Mr. Komolafe explains that in pursuit of the Commission's commitment to derive value from the country's abundant oil and gas reserves and increase production, the Commission has been working assiduously with multi-client companies to undertake more exploratory activities to acquire more data, to foster and encourage further investment in the Nigerian upstream sector. He adds that as a result of additional data acquired in respect of deep offshore blocks, the Commission has added 17 deep offshore blocks to the 2024 licensing rounds. And then we move to Kenya, where it doesn't seem all is calm there. Kenyans who own cars will now be required to pay motor vehicle tax starting July 1st, 2024. The National Assembly Finance Committee proposed to drop the 2.5% motor vehicle circulation tax in the Finance Bill 2024. In its recommendation in Parliament on Tuesday, that was June 18 today, the Kimani Kurai-led committee notes that the motor vehicle tax was not anchored under Section 3 of the Income Tax Act. Meanwhile, Nairobi Police Chief Adamson Bungei has rejected plans to organize protests in Nairobi's CBD today, opposing the Finance Bill 2024. He adds that the police have increased patrols in the CBD to prevent disruption of businesses, noting that no proper application for protest permit was submitted. Earlier, Kenyans turned to social media to share a statement called Occupy the Parliament Code of Conduct ahead of the tabling of the Finance Bill 2024. Well, I don't think you see a lot of countries where citizens will willingly want to get more tax, take the burden of more taxes. Now we move over to the African Development Bank, where it is announced that it will match the $150 million in concessional loans and grants from Italy intended to fund projects on the continent. This was revealed in a statement by the AFDB as the operationalization of Italy's Mattei plan for Africa gets underway. Earlier in the year, the Italian government unveiled a project aimed at boosting development in Africa to spark economic growth that will curb irregular immigration to Europe. The plan was unveiled as migrant arrival in Italy jumped 50% in 2023, and that's according to data from Italy's Interior Minister. AFDB has had a bilateral agreement with Italy, including a co-financing arrangement and trust fund to finance joint project, states that Italy has committed approximately $150 million in highly concessional loans and grants, and the African Development Bank Group would at least match this amount. The objective is to pursue Italian and African Development Bank Group priorities as set out by the Mattei Plan for Africa and by the Italian Development Corporation strategy. And now we go to Ethiopia, where a $94 million project financed through a public-private partnership has been initiated to transform Ethiopia from a wheat importer to a self-sufficient producer and exporter by supporting 500,000 smallholder farmers. The goal of the Climate Resilient Wheat Value Chain Development CREW project, launched in May, is to support farmers in the Ethiopian states of Afar, Amhara, and Somali to increase wheat productivity from 3 to 4 tons per hectare, harvesting an additional 1.62 million tons of the staple food. The African Development Fund, ADF, the concessional arm of the African Development Bank, is providing a grant of $54 million. The Netherlands will contribute a grant of $20 million, while fertilizer company OCP Africa and the government of Ethiopia will each provide grants of $10 million. In another development still in Ethiopia, some $209 million was secured from coffee exports in a month. The Ethiopian Coffee and Tea Authority revealed this. And speaking to Ethiopian Press Agency, Public Relations Chief Communication Officer states that the stated amount was gained from over 43.481 tons of coffee exports in May. During the past 11 months, over 252,466.98 tons of coffee was exported, and the nation has gained $1.2 thousand US in return. And just close to Nigeria, in Ghana, the Ghana and the Fund Mission, that's the IMF, in April, they reached a staff-level agreement following the second review of the ongoing program, but had to hold on to consideration by the executive, as the fund had indicated the board's approval was hinged on further progress made in the country's external debt restructuring negotiations. Now, Ghana's Ministry of Finance on June 12 subsequently announced the government of Ghana had reached a memorandum of understanding with its official creditor committee, co-chaired by France and China, paving way for the approval of that second review that was needed by the IMF Executive Board. Ghana is therefore expecting to finally unlock $360 million on June 28th. That's the third tranche that is eligible to in the $3 billion three-year facility from the International Monetary Fund. Now let's head to crypto with Laddie Williams, and I know Laddie will be really interested in that South Africa looking the way of crypto traders now to get more taxes.
Because I'm trying to understand how taxing crypto really work at this time. You know, like a country like Nigeria now, we know most of the investors are getting crypto through P2P, exchanges and all of that. So I'm wondering, are you going to be taxed when you buy or taxed when you make profit, from, trading that crypto?
So I guess at the end of the day, the bigger picture is that there has to be regulation.
Right.
If there's regulation, then the authorities can monitor or reach, some of these avenues through which taxes can be gotten.
Maybe through the cryptocurrency exchanges,
exactly,
at this point. But most of them have run away at this time, so I wonder how that's definitely going to happen. But let's look at the market. I know some investors here don't want to hear about taxes right now for the crypto market, because the crypto market is red right now. It's seeing profit-taking, big profit-taking. Let's look at the sentiments there. It's neutral at this point. Almost, it looks like it's tending to fear at this point in the crypto market. Let's look at the cryptocurrencies we track now. We see the likes of Bitcoin there, giving up, moving further away from that $70,000 level, 0.68% down. We've seen Ethereum also losing out there, $3,425, down 2.67%. But the biggest move down is Cardano, ADA, 37 cents, losing the 40-cent level, down 7.22% at this time. So to some top stories now, we see Hamster Combat. They've hit about 150 million users at this time. We know one of these tap-to-earn projects where you see people tapping their phones constantly, trying to make some money. So we're seeing a lot of users on the Hamster Combat there. Big move there, 150 million users. Fun fact, that's more than the likes of WhatsApp grew, in such a short time. Then we also see Tether Holdings. They're creating a synthetic dollar at this point. That's the biggest stable coin in the market at this point, Tether Holdings. They're working on the synthetic dollar, and it's definitely going to work just like the USDT, but I think it's going to be called AUSDT or something. But this one is backed by gold. So yeah, I guess we're going back to the gold standard at this point. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide, great to have you.
Yes, thanks for having me, Laddie. It's a great day. Yeah.
I'm sure you see the blood on the street at this point. It's all red, and we see Bitcoin moving further away from the $70,000 level. But it seems the altcoins are getting hammered even more.
It's getting worse, Laddie. If you look at the cascade of losses, a lot of records been set. Liquidation on Dogecoin alone, about 16 million worth of long positions were liquidated, the worst we've seen in 2021. Also, you look at the losses throughout the day, it's going to $500 million. And, just like we retreated, there was slight pullback from the 70,000 support to the 65. But, a 5% drop shouldn't have led to double digits in the other space. So the guesswork is that because the US Fed has retreated, staying hawkish, it means the appetite for risk have moderated. So we're seeing liquidity draw down And that's why meme coins like Shiba Inu and Dogecoin have lost more than a tenth of their value in less than 24 hours. And it seems like it's not getting abated, because if you look at the recent price action, Bitcoin is flirting around the 65,000 support. A break towards that level might take us back to 63.5 to 60. And definitely what we see in the altcoin space might trigger more sell-offs. So, Paddy, it's pretty much a blood on the street.
Right, but I'm sure this was, expected, at this time, knowing fully well that we've seen the rate cut, by the U.S. Fed being pushed further away, into 2024. But is it time to just run into stable coins, or it's too late for that?
The irony about it is that, the market anticipated that the king of altcoins, Ethereum, will create support. You recall that Ethereum's spot ETF is about to come in play next month. So investors were anticipating that institutional investors would take position, and the fact that Ethereum could drop below the 3,005 tells you that it seems caution should be in play here, and the market seems to be oscillating towards that level. But I think definitely a bottom would definitely figure in. But, in this space, it's very difficult to give the exact point. But I feel that once there's clarity around Ethereum spot ETF, the altcoin will get in that support. But right as we speak, it's been a miserable day for altcoin buyers.
Yeah, definitely a miserable day for them, because we see altcoins down double digits at this time. But what are you seeing going into the weekend? And let's say the month of June, should we just say the month of June might just be negative for the crypto market?
I think it's safe to say that in the altcoin space, the month of June is already negative. But, the elephant in the room is Bitcoin. Bitcoin has been able to hold the support 65. It broke below that 2 times, but it bounced almost immediately. So we'll wait to see the numbers. Economic data this week, despite the fact that we're not expecting heavyweight, will give us a direction. And also we're going to look at how investors take those sentiments going forward. But, looking at the equity market space, you could see that crypto companies are pretty much doing well. If you look at Coinbase, MicroStrategy, and Bitcoin miners, they've been able to still pull in positive gain and rally with the S&P. But that can't be said in the digital space.
All right, thank you so much, Olumide Adeson. Always great having your perspective.
Yeah, thank you for having me, Ladi.
All right, Ini, so there you have it. I guess Bitcoin is not giving any RAM gifts, at this point.
Oh, I forgot you're still looking for your RAM.
I'm still looking for my RAM.
Ladi, I think you have to wait till next year, because holidays are over in a couple of hours.
Right.
And so...
and hopefully RAMs are cheaper then, maybe.
That's leftover, though.
Leftover. Right, we'll see.
All right, so that's it on the program. Thank you so much for being a part of it. I hope we've been able to add some value to your holiday, even, pull you a little bit into the business side of life, because you always need to do business. We'll do it again tomorrow. God's grace, I'm John McCoy. Enjoy the rest of your day.